don't think it is at all. I think Bitcoin has a very unique asset that the rest of the space doesn't have. The rest of the space is basically the applications layer of the new internet of value, and Bitcoin is the value, and that's the different thing that it holds. So it actually doesn't need any other applications apart from to be accepted as a store of value and to have network effects for that particular narrative. That's literally all it needs to do. And we'll come on to talk about how that develops over time, because still it's a relatively immature market because it's still volatile. It doesn't have a yield curve, so there's no time preference within it, stuff like that. But that's all coming. So I don't think it needs any of these other things. The other things are just strengthening the network. As Lynn said, it brings new elements of new networks on top of each other, and that's all well and good. But people are missing the point if they think there needs to be a consumer app. Bitcoin is the app. That's all it needs to be. And we can all use it. Much like gold and jewelry. Jewelry's a red herring, really. Yes, gold jewelry was for a purpose. It meant you were able to store gold yourself and you would wear it. That's basically it. The actual use case is still gold as a store of value. And that's it. And that's okay. What we think of is, okay, there's Ethereum, we build applications on it, and what happens if they go somewhere? This was the old Bitcoin view is, oh my God, if Ethereum came, people aren't going to use Bitcoin. It's nonsense. The view that I have is the space is growing at 113% a year. That's the whole crypto space in terms of number of active users. At 113% a year, it's double the rate the internet got adopted between 1990 and 2000. This has been going on now for best part of about 10 years, this kind of network adoption. This is the fastest adoption of any technology in all recorded history. It's faster than the mobile phone, it's faster than the telephone, it's faster than the internet. The space is growing much faster overall than Bitcoin or Ethereum. Once you start developing all of the other use cases, they will find homes to sit on, whether it's one network versus another. And that's okay. It's because the whole thing has network effects. So Bitcoin has a network effect. Ethereum arguably has a faster, stronger network effect right now because there's a lot more action going on with more types of interactions between nodes going on. But then the whole space is seeing the same. And then we've got interoperability layer above it, which connects it all. So yes, things can shift around, but the sheer magnitude of what is about to happen onto the bigger network, let's call that digital asset space, is so big that it makes no difference. And I went and spent some time looking about network effects, and I basically showed that actually the largest single explainer of prices of Bitcoin was exactly the same as that of Ethereum, which was network effects. And it wasn't to do with stock to flow. It wasn't to do with anything else. It wasn't to do with whose monetary policy. It was how active the network is. So I still believe Metcalfe's law is the right way of valuing all of this. And just different protocols have different attributes and will be used for different things. And that will shift and change as things develop. And that's good and healthy, I think.